These 4 trading sessions will help you to know when to trade and when not to trade certain currency pairs. In every minute of every single trading day, traders are buying and selling currencies globally. But there are certain times of the day when certain currency pairs are traded higher than others. There are trading times with quiet market movement, and there are trading times with volatile market movement and increased liquidity. To maximize your profitability and get to know the best time of the day to trade Forex, good enough for a brilliant trading strategy, you need to understand what Forex trading sessions are. To begin with, what are Forex trading sessions? The Forex market operates on a sort of a schedule that allows traders to trade 24 hours daily, 5 days a week, leaving traders with different trading hours when liquidity and market movements are either high or low. Forex trading is structured into a number of sessions daily, with the length of each session determined by its geographical location and timing, mostly about 8 to 9 hours for each session. There are certain factors that determine how the market moves, either to the bearish side or to the bullish side, like GDP reports, inflation rates, interest rates, trade data and analysis, news release, employment reports, consumer spending, and a lot of others. Note that to trade successfully in any of the sessions, you need to stay informed with economic news and calendars released by major financial institutions, as well as understand the use of technical tools like moving average and the likes to analyze the market and identify potential entry and exit points. Unlike the centralized stock exchange, Forex functions as an over-the-counter market, where trading is made possible by banks, brokers, and financial institutions across global major trading centers. It is necessary to understand why Forex trading sessions is important. We already know that you can trade Forex at any time of the day, but the trading volume differs based on different trading sessions, which determines the overall market activity, trading opportunities, and then the volatility. At the start of each session, big financial companies like investment banks are very active, followed by the release of economic news, and these news reports affect the price movement in the market. The risk of slippage is reduced when trades are made during peak hours, that is when the liquidity is high. Also, knowing when market activities are likely to be high allows traders to adjust their risk management strategies accordingly. Forex trading sessions provides a framework for understanding when and how the market is likely to move. By leveraging this knowledge, traders are able to make more informed decisions and improve their overall trading performance. Let's head on to these Forex trading sessions. Generally speaking, there are 3 major sessions which the Forex market operates, which are the European session, the North American session, and the Asian Pacific session. But these sessions are mostly identified by their major financial centers, like London is the major financial center for Europe, New York is the major financial center for North America, and then Tokyo and Sydney are financial centers for the Asian Pacific region. In essence, the sessions are the London session, New York session, Tokyo session, and Sydney session. One very important key to profitability while trading in these sessions is that you need to trade what is active in each session. Let's now look at these sessions individually and know how they work, beginning with the London session. We know London as a global financial hub. This results in the London session having one of the highest trading volumes of all trading sessions with exceptional liquidity. That is to say, a major part of all Forex transactions occur during this session. Due to the high level of trading activities that occur during this session, spreads can be said to be tight, which translates into minimized trading costs. And also, large orders can be executed with a considerable level of price slippage. Nevertheless, traders must also be aware of the high level of risk obtainable while trading with these sessions, and they must implement appropriate risk management measures like the stop loss orders. Meanwhile, day traders and scalpers who seem to capitalize on short-term price movement can find it ideal to trade during the London trading session due to its high level of liquidity and volatility. The high influx of traders and the release of key economic news by the Bank of England and England Central Bank and many others are responsible for price swings during this session. Now, when does the London session open? The London session opens by 8 a.m. and it closes by 5 p.m. London time. Note that Forex trading hours in UK is the same as the regular business hours in London. Currency pairs involving the British pound sterling, euro, and the Swiss franc tend to be active during this period. Remember, I had earlier said trade what is active in every session. Just as the London market is returning from its lunch break, the New York session kicks off. The New York session opens by 1 p.m. and it closes by 10 p.m. London time, and this overlaps with the London session since the London session is closing by 5 p.m. Now, for those in the US, 1 p.m. is just the beginning of the business day, which is 8 a.m. As soon as the London market closes or is about to close by 4 p.m., liquidity and volatility tends to drop. Now, in this session, which is the New York session, the most prominent currency that is traded here is the US dollar, since it is the domestic currency of the United States. At the end of the New York session, the Sydney session picks up, opening by 10 p.m. and closing by 7 a.m. the next day. This is when the Australian market picks up for the day. Also, this is the first trading session you experience for the day while trading with the London time. This is also the first trading session to open after the weekend on Sunday by 10 p.m., opening the trading week. The Australian dollar and the New Zealand dollar tend to experience more price movement during this session. Now, to trade in this session, you need to study the market and understand price movement, because in this session, price seems to move, or the market seems to move relatively slower. Many traders overlook the Sydney and the Tokyo session because it is not as liquid and volatile as other sessions. But traders who understand how to trade in these sessions make profitable moves. For the Tokyo session, it experiences substantial trading volumes, particularly with the yen pair, as it opens at the business opening hours of Japan. But for other countries in Europe and North America, it is still the early hours of the day. So at that time, many traders will be sleeping. It opens by 1 a.m. and closes by 9 a.m. London time, overlapping with both the London session and the Sydney session. It is mostly during these overlaps that this session tends to experience increased volatility and liquidity. Since the focus during this session is the yen pair, especially the USD yen pair, traders often employ strategies that capitalize on the yen pair movements. Notice how each session hands over to the next session. This is how Forex market runs for 24 hours a day, as no single session runs 24 hours. The obvious difference between these sessions are the different players involved in each session due to their geographical location, their timing, and then the liquidity change. Note that when there is high liquidity, of course, there is a high percentage of traders participating in the market. This eventually leads to high trade volumes, which can eventually translate to tighter spreads because there is competitive bid and ask price, narrowing the gap between prices. That is to say, at this period, traders tend to experience minimized trading costs. However, when there is low liquidity, it means that there is low percentage of traders in the market, making it difficult to find counterparties for trades. And this can lead to traders experiencing wider spreads to compensate for the risk of opening positions in a less liquid market, which invariably translates to higher trading costs. It is important for traders to be aware of daylight saving time changes and to adjust their timing accordingly. Now let's look at the sessions overlap. As earlier said, the market can experience peak liquidity when these sessions overlap, and there are basically 3 overlaps. But let's begin with the Sydney and the Tokyo sessions overlap. The Sydney and the Tokyo overlaps occurs between 1 a.m. and 7 a.m., where traders in Asia are actively trading pairs that are related to the Australian dollar, the New Zealand dollar, and the Japanese yen. The next session is the Tokyo and the London session overlap. This overlap happens between 8 a.m. and 9 a.m. for just 1 hour. This is the period when the Tokyo traders are wrapping up with their trades for the day, while the London session or the London market is just beginning their trading day. This is one of the peak moments for the London markets because it is just the start of their day. The last overlap is the London and the New York sessions overlap. This overlap happens between 1 p.m. and 5 p.m., which is the close of the London session. After the London session closes, the New York session might begin to experience some sort of recession. Now, you can trade pairs relating to the British pounds, the euro, the Swiss franc, and the USD in this overlap. Now, let's answer the question of what time does the Forex market opens and closes in the UK. The Forex market opens by 10 p.m. on Sunday, beginning with the Sydney session, while it closes by 10 p.m. on Friday, ending with the New York session. No trading activity goes on during the weekend as the market officially closes, so you may choose to leave your trades open or closed for the weekend, depending on whether you are trading a short-term or a long-term trade based on your currency pair, your trading strategies, or your risk management options. So it all depends on what works best for you based on your trading preference. While the market is set to close by 5 p.m. on Friday, some brokers still offer traders the opportunity to trade certain currency pairs during the weekend. But remember to choose and to trade what works best for you depending on your trading strategy, and put into consideration much research before embarking into such weekend trades. With this foundation established, let's head on to answer the question of when is the best time to trade Forex in the UK. There are basically two best periods to trade Forex in the UK, and the first is at the beginning of the London session. As earlier said, the London session opens at 8 a.m. At that time, most of the institutional traders execute their trades. You will experience fast price movements at the beginning of the session when compared to the late morning, because trading will usually become less liquid between the hours of 10 to 11 a.m. but it will pick up again when the US market opens, that is when the New York session opens by 1 p.m. The second best time to trade Forex in the UK is during the London and the New York overlap. We already know that during this period, traders in London and UK are actively trading between the hours of 1 p.m. and 5 p.m. It is one of the best times for UK traders because trades go across two major financial centers and continents for over 3 hours. I would like to add that UK traders are not restricted from trading in other sessions. The major consideration here is just timing and the liquidity level. So if you can conveniently trade during these other sessions, then go ahead. But make sure you have studied the market well enough to know how to navigate through trades with the right trading strategies and tools. Let's head on to the worst time to trade Forex in the UK. There is actually no worst time to trade Forex in the UK. Instead, those times may not be favorable for UK traders, mostly because of the timing, and then we can talk of currency pairs. Let's look at 3 different trading times when trading Forex may not be favorable for UK traders. And the first is during the Asian session. We already know that the Asian session opens by 10 p.m. and closes by 9 a.m. That is a combination of both the Sydney and the Tokyo session. During this period, UK and most parts of the world are usually asleep, leaving only those in the Asian region to trade the market, and this will lead to low liquidity, low price movements, higher spreads, and higher trading costs for all UK related currency pairs. But then the Asian based pairs can be traded during this period. The next worst time is Friday afternoons. Now for UK traders, the market closes by 5 p.m. Due to this, the market tends to be very busy on Friday mornings because traders are in a hurry to close their positions for the weekend. The market begins to be sluggish and quiet during the afternoon because most big traders have closed for the weekend, and this will eventually lead to widened spreads. Because there has been no trading activity during the weekend, the market tends to be sluggish at the start of the London session on Monday because traders are trying to settle their weekend transactions. At that time, the price movement tends to be slow, leading to higher spreads and higher transaction costs. The lack of trades on Saturdays and Sundays makes a gap to appear on the chart on Monday morning, making technical analysis to be more challenging. Let us see how to identify Forex trading sessions on the chart using the TradingView platform and the Euro-USD pair. Ensure your time is rightly set to UTC London. To identify these sessions on the chart, you will need to use an indicator called Sessions on the Chart by Aurochs_AIF. These sessions are represented by colored boxes for each session, showing the session's time frame and active trading period. On the screen, you will notice 3 colored boxes representing 3 sessions. To individually identify the sessions, go to the indicator setting. You may want to ignore this timing. Let's uncheck other sessions, leaving only the London session. Now we can clearly see that the London session is the green colored box and it opens by 8 a.m. and closes by 5 p.m. To add the New York session, we will repeat the same process and the red colored box has been added to the screen. We can see that the New York session opens by 1 p.m. and then it closes by 10 p.m. This is the point where both sessions meet, between 1 p.m. to 5 p.m. when the London session closes. We will undertake the same process to add the Tokyo session, which begins by 1 a.m. and ends by 9 a.m. Also observe the overlap. Let's add the Sydney session, which begins by 10 p.m. and closes by 7 a.m., also overlapping with the Tokyo session. Let us work with the session indicators for only the London and the New York session, leaving the Asian session as the white part, like the white background. You may also want to change the session colors and opacity by going back to the session setting and click on Style. You can adjust opacity here and you can change the color here also. Notice the trend on this chart. For this day, the market was at its peak at the overlap between both sessions. For the previous day, the market experienced significant changes from the overlap of both sessions, but did better during the New York session, with the Asian market experiencing a consolidation. The market tends to pick up during the London session in most cases. Notice that the New York session always does the opposite of the London session. All these are reasons why you need to study the market properly and pay attention to news releases to use the strategies suitable for your trades profitably. The London session is a very important time for Forex traders in the UK. By understanding the dynamics of this session, you are able to optimize your trading strategy and then increase your chances of profitability. Remember to leverage on the high volatility and liquidity of the London session. Focus on key currency pairs and practice sound risk management strategies. For more detailed trading education and brokers review, subscribe to this channel. Visit our website on safeforexbrokers.com for a more expert review and exclusive trading tips. Don't forget to like this video and leave a comment with your thoughts and questions. Until I come your way again, happy trading.